Hello everyone and welcome to this week's Market Outlook from Exness. In this video we'll be discussing one key idea for trading this week, the possible narratives behind that and what to be aware of on the economic calendar. I'm Michael Stark, Financial Content Manager at Exness, and joining us today to give us his idea and insight is Stanislav Bernikov, Trading Specialist. Thanks very much, Stan, for joining us.
Hello Michael, thank you for having me today.
What's the idea then, Stan, for this week? Which do you think is the instrument in focus and which direction is possible for it?
I focus on the potential long for American dollar versus JPY, USDJPY, because we've had the substantial strengthening of the US dollar and overall hawkish expectations of Fed for the upcoming meeting in September. So this situation was triggered by the strong employment report from the United States, which is NFP, and this situation triggers expectations about hawkish scenario, which is actually probably the three-step hike. And we've seen other indicators such as 30-year Treasury yields and probabilities for hawkish scenario increasing. So that gives American dollar some fuel this week.
Mm-hmm. And in terms of the narratives that behind that, well, we've discussed, of course, the likelihood of a triple hike by the Fed. Can you also briefly mention what kind of impact the strong job data, the strong NFP from last week has had on this instrument?
Sure. So first of all, the main thing that we see is the increasing yields of 30-year Treasury bonds. They have been decreasing since the middle of June, but now they seem to get back. So hawkish expectations are back because strong data means that Fed can actually do whatever they want in terms of interest rates. They can raise interest rates, so they are not concerned very much about putting economy in the recession, though it is in the technical recession. But strong jobs data gave us the idea that Fed will be hawkish, rather hawkish than not. And we see the probabilities of hawkish scenario for September skyrocketing since the previous week. So this gives the American dollar a fuel, and that's why we're putting USDJPY on the list.
Mm-hmm. And for traders who are taking this idea, using it, what do you think is some of the key factors to be aware of on the economic calendar? What could generate volatility or generate significant movements?
Sure. So of course, publication of United States CPI is the most important indicator this week because CPI is the consumer inflation. Well, though Fed is relying on PCE rather than CPI, but they are close enough so they congregate over time. And still CPI is the main inflation benchmark for the general public. So investors and traders will very carefully monitor for this publication. In case it is greater than anticipated, probably American dollar can even grow more aggressively, pushing down gold and pushing down other instruments. So Wednesday is kind of very important this week.
Mm-hmm. So in summary then, the key idea for trading this week is a possible ongoing upward movement by dollar yen, possibly testing the latest high around 139. And the main narratives that are driving that is the strong job data that is propelling expectations of further hawkishness for the Fed, and of course the movement of 30-year Treasury yields. And this week, the central focus on the economic calendar is inflation. If that comes in divergent from the expectations, we can probably expect significant movement by the dollar and by other instruments as well. So it's a critical release on Wednesday. Thanks very much, Stan, for joining us, giving us the idea and explaining it a little bit more for us.
Thank you, Michael. Have a good trading week, everyone.